Now I'm discussing 2017 paper. So here you are given the receipts and payments account. So whenever you are given a problem wherein which you are given a receipts and payments account, that means to say that the amounts which are received in cash are given and the payments which are made in cash are given. So in case of receipts and payments account, the amount might be relating to the present year, the previous year or the following year. That isn't a problem for us. So whatever is received in cash, that we record. So coming down here, so going by the receipts here, consultation fees. Consultation we'll have to take the total of all the years. So 18, 19, 19, 20, 20, 21. So all this three will be added up. Next one is a visiting fees. Doctors visiting fees is a professional receipts. Winnings from lottery is not related to income from profession. That will be taken up from income in income from other sources. Interest on post office savings bank account also we don't record here. Gift from patients. So gift from patients is a professional income. Share from Hindu undivided family is exempted. I mean, that we don't take and it is not related to profession. Sale of medicine is in the regular course of the doctor's profession. Loan from bank. Loan, receipt of the loan amount received as well as the repayment of loan can never be taken up. It is neither an income nor an expenditure. It is a liability. Loan can never be shown as a receipt. So if the loan is taken for the professional purpose, then the interest on the loan you can claim as a professional expenditure. So going by the payments here, rent of the clinic. Okay, so all these 2 years data, we have to sum it up and take it up. Surgical equipments. I have told you that surgical equipments, the rate of depreciation as per the income tax rules is 15%, 1.5. If the rate of depreciation is given to you in the problem other than the one that is given under the income tax act, rates of depreciation I have already discussed in the previous slide. So if that particular rate of depreciation is given very specifically to you in the problem, we don't take up the rate under the IT act. Okay, so we will go with whatever is given in the problem. If the problem is silent, then we apply the rates of depreciation as per the IT rules. So in case of surgical equipments, it is 15%. I have told you while I was discussing income from business that the asset should have been used for 180 days or more. So here, if the asset is purchased between 1/4/2019 to October, 2nd October 2019, we consider it as the completing 180 days. So make a very small correction here. So surgical equipments and computers were purchased and put to use on 10/9/2019. You should make it as 10/9/2019. So it's not 18, actually 19. So since your previous year is 1920, so a small mistake here. I think you can take care of that. So here, if the asset could have been used for less than 180 days, I would have multiplied it by 50%. The depreciation could have been reduced by 50%. So no problem at all. So 180 days or more, the asset is purchased for more than 180 days or more. So we get straight away multiplied with the percentage. So 1 lakhs into 15%. So next one is the computers. Computers, the rate of depreciation applicable to the computers is 40%, 40. So 50,000 into 40%. So to 20,000 interest on loan. Very specifically, it is given to you, right? So whenever an interest on loan is paid, so if it is for the profession, then we consider it as a professional expenditure. Professional books. The professional books, whether it is annual or not, the rate of depreciation is 40%, 40. So 50,000, 15,000 into 40%. So that we do. And 6,000 is what is the depreciation here. Car, the rate of depreciation is very much given to you there in the problem. One more thing you should take into consideration, we never take up the written down value. Whatever is given to you in the problem, we take up. We never go by written down value. Whatever is a one purchase of the car, that will be taken up. Okay, so don't confuse yourself. So we will go with 1,50,000 into 15%, and 60% is for the profession. So in the first adjustment is very clearly given. So 1,50,000 into 15% into 60% is what is used for the profession. Household expenses are not related to profession. Income tax is a non-professional expenditure. Life insurance premium is a non-professional expenditure. Gift to mother cannot be taken. It's a personal. Lottery ticket is not coming. Staff salary is a professional expenditure. So going by the adjustments here, written down value, I very clearly told you we will not go by written down value. Whatever is the one which is given to you in the problem, we will take up. Okay, so visiting fees due. So apart from the visiting fees, 80,000, 18,000 is due but not received. When you are given the books of accounts are maintained under receipts and payments account, what I receive in cash, outstanding amounts will never come anywhere. Even in the consultation fees due but not received, even this will also not come. Surgical equipments and computers have been purchased on 10/9/2019. Make a correction. So it is completing 180 days. So we go with the rate of depreciation multiplied by the value of the equipment. So if you go by the solution here, so consultation fees have been taken up for all the 3 years. Visiting fees is done. Outstanding amount is not added up here since we are maintaining the books of accounts on the receipts and payments account. Gift from patients will be taken. Sale of medicines is a regular professional receipt. Then as professional expenses, rent of the clinic, surgical equipments are depreciated at 15%. Computers are depreciated at 40%. Interest on loan is for profession. So that is taken. Professional books, the rate of depreciation given under the Income Tax Act is 40%. Depreciation on the car is 15% and 60% is related to the profession. Car expenses are there. 30,000 into 60% is what related to profession. Salary to the staff is 1,20,000. So if you add up all these items, it works out to 4,04,500, and the professional income left is 1,10,500. This is about this problem. Next is 2015 paper. So Dr. Rekha is a medical practitioner. Again, you are given a receipts and payments account here. So here going by the receipts sides, visiting fees is a professional receipt, consultation fees is a professional receipts, special medical camp remuneration is a professional receipt, rent from house properties is a non-professional receipt. Gifts, when it comes to gifts, you are given in the adjustment that 50% is from patients. So 60,000 into 50% is what we received from patients, which is a professional receipt. So we will take it up. Dividend is an exempted income. Interest on debentures is income from other sources. Illi baralla. Salary is a professional expenditure. Clinic rent is a professional expenditure. Then the motor car expenses. So here very clearly given the percentage of use for the personal use, 30% of motor car usage, 20% of traveling expenses, 25% of telephone bills is for personal use. So the other meaning of this is 70% of car usage, 80% of traveling expenses, and 75% of the telephone bills are related to profession. So here going by the car, 70% we have to take. So 70% of 70,000, that works out to 49,000. Driver's salary 60,000, which is a professional expenditure. Medical books are depreciated at 40%. So the rate of depreciation applicable as per the IT rules is 40%. So 30,000 into 40%. Motor car purchased is 5 lakh. The rate of depreciation that is allowable to the car is 15%. So 5 lakhs into 15%, and 70% is what is used for the business. So we will take up that, profession. Household expenses will not come at all. Telephone is 29,000, 75% is related to profession. So 29,000 into 75%. Traveling expenses is 20,000, 80% is related to the profession. So 20,000 into 80%, 16,000. Surgical equipment, the rate of depreciation as per the IT rules is 33,000 into 15%. So this is about the payment side. So going by the remuneration. So remuneration from medical camp is definitely a professional receipt. So we are not concerned about how it is spent, whether it is donated, whether it is eaten or whatever it is. That is not our concern. So that will not affect us in any ways. Then the depreciation as per IT rules. So whenever we have any assets being purchased in the previous year, we need to allow the rate of depreciation at the rates which is given. If in case very specifically some percentages are given in the problem with respect to any asset, we will go with what is given in the problem. Okay, that is clear. Gifts of Patients is 50%. So depreciation on the medical books is given at 40%. So I think we can go with the solution here. So visiting fees is 1,40,000, consultation fees 4,76,000, special medical remuneration 50,000. Gift from patients is 50% because 50% is what is received from the patients. So out of the total gifts. So if you add up, it works out to 6,96,000. So going with the professional expenses, we have salaries, clinic rent, motor car expenses, where 70% is attributed to the profession. Then the driver's salary, medical books are to be depreciated at 40% as per the IT rules. Motor car, depreciation on the motor cars is 5 lakhs into 15% is a rate that is prescribed under the Income Tax Act. 70% is what related to profession. Then the telephone expenses is 29,000 for the year and 75% is what is related to the profession. So traveling expenses, 20,000 into 80% is what is related to the profession. Surgical equipments are to be depreciated at 15%. So if you go by this particular problem, wherever an asset is purchased, we need to allow the depreciation and also the medical books. So this is about this particular problem. Totally, finally the professional income is 3,17,800. This is about this problem.